As we reflect on 2023, question is where will C3.ai be in 1 year's time? Now, this is the monthly chart, and although price had a whopping 50% retracement from the lows of January, prices are still up 2x. So, not a bad year. Now, scrolling down to the weekly chart, what we can see is a beautiful weekly seller's level at $51 working out, which was the cause of the pullback. However, price in recent months have hit support, which was resistance in the past. We have a beautiful daily bias level at $20. I don't think price is going to get that low because we are in a risk off environment. Now, before we continue looking at the analysis on the smaller charts, I do want to get into this article again coming from the Motley Fool. Where will C3.ai be in a year's time? So AI Hype has sent shares of C3.ai soaring in 2023 with outstanding gains of 153% as of this writing. But the wheels have come off in recent months as it is becoming clear that the company is failing to capitalize on the massive opportunity in AI software market. The company's stock plunged nearly 11% earlier this month after the company released its fiscal 2024 second quarter results. Shares are now down 39% from their 52-week high established in mid-June. The problem, however, with C3.ai's guidance, which points toward a deceleration in the company's growth, C3.ai expects 76 million in revenue in the current quarter, which is lower than the 77.7 million Wall Street estimates, and points towards a year-over-year increase of 14%. That's lower than the revenue jump C3.ai recorded last quarter. However, C3.ai's aggressive spending stance isn't translating into growth yet, though the company is confident that the improving customer engagement and the sharp jump in the number of pilot projects, and customer trials could help it step on the gas. All right, can growth accelerate once again? Closer look at some of the C3.ai metrics suggests that the company could indeed have a solid 2024. It witnessed a 100% year-over-year jump in bookings, while the number of new agreements that it struck increased an impressive 148% year-over-year. The number of pilot projects also increased 177% over the year ago quarter. However, a critical look at certain other metrics suggests that the growth in agreements, booking, and pilots that C3.ai management is boasting of isn't helping the company's revenue pipeline. All right, so can the stock regain its mojo? Again, it's going to depend on the acceleration of growth. Analysts remain confident of an acceleration in C3.ai's revenue growth next year. According to consensus estimates, C3.ai revenue could increase by 20% in fiscal 2025, up from the 15% growth it is expected to deliver in the current one. C3.ai is trading at an expensive 11 times sales following its 2023 surge. The chart above shows that the inflated valuation hasn't been matched by an increase in the company's top line. So the orange line represents the revenue, 12-month rolling, and you see the price per sales ratio. It has come down with the price, but still kind of high. In simpler words, C3.ai is overvalued right now, and it may not turn out to be a good investment over the next year until and unless its growth accelerates meaningful. So it's going to be all about earnings. And when we go down to the daily chart, and when we look at the previous earnings, we can see price gap down. We can see back in September, price gap down. We can see earnings back in June, gap higher, and then we had a gap higher in March. So we had the first two quarters in 2023 gap higher on the growth, but again, growth was slowing, and you had two gap downs. So earnings are coming up in March of next year. The question is price going to gap down on earnings? I think price is going to gap down earnings because going into 2024, we have seen All-time highs that established on the Nasdaq, the YM, the Dow, and SP is right there. Um, and so most of a stock's gain or losses are tied to the index and the sector that they're in. That represents about 80% of a stock's move. So I do anticipate price breaking and closing above this $32 level here, and then continuing to move higher. Scrolling back out to the weekly chart, although it's overvaluated, or although it's overvalued, we could see price continue to move higher and retest this $50 level going into next year. Thanks for watching. Subscribe. Please like the video.